Next year, thousands of UK seniors could see a £575 pension increase, but if you were born before the cut-off, you might miss out entirely. This isn't just numbers on a screen. It could impact your budget, your plans, and your independence. Here's everything you need to know before it's too late. Welcome to UK Insight Now, your trusted guide for pensions, benefits, and senior living in the UK. Stay informed, stay supported, and enjoy your golden years with confidence. Subscribe now and join the community. Here's what's going on. The UK wants to ensure those already drawing the state pension see their income rise each year, thanks to the so-called triple lock mechanism. This means that each April, the weekly payment goes up by whichever is highest: inflation, CPI, average earnings growth, or a fixed minimum of 2.5%. So for many pensioners, a bump of £400, £500 or more is expected next spring. But, and here's the catch, not everyone sees the same increase. In particular, those on the old state pension scheme, men born before 6 April 1951, women born before 6 April 1953, are at risk of missing out on the full rise. Meanwhile, those on the new state pension scheme, men born on or after 6 April 1951, women on or after 6 April 1953, are in line for the full uplift. What does this look like in practice? Suppose you receive the full new state pension rate, around £230, 25p per week, in 2025/26, an increase of around 4.8% from April 2026 would raise that to approximately £241, 30p weekly, about £12,548 a year. On the other hand, if you are under the old pension system, you might see a smaller increase because parts of your pension calculation rise only by inflation, not the full triple lock rate. That means the difference between what you expect and what you receive could stretch into the hundreds of pounds, and that's where the £575 type figure in the title comes into play. So what should you pay attention to? Let's break it down. 1. Which pension scheme are you on? If you're a man born before 6 April 1951, or a woman born before 6 April 1953, you're likely on the basic state pension plus any additional state pension, SERPAs or S2P, from the old system. If you're born on or after those dates, you're under the new state pension regime. This matters because the way increases are applied differs between the two. Making that call now is crucial. If you assume you'll get the full increase and you don't, you could be disappointed. 2. The increase, how much and when. The next official uprating will take effect from 6 April 2026. According to current forecasts, under the triple lock, the increase will be around 4.8%. For someone on the full new pension, that could mean around an extra £575 per year, roughly £11 per week, just from the base amount rising. Bear in mind, this is an estimate. The final figure depends on the September CPI inflation figure and the May-July earnings growth data for the year before. 3. The cut-off problem. Here's where the title warning becomes real. If you're on the old scheme, even though your pension increases, the extra parts of your pension, for example, additional state pension elements, might only increase by inflation, not the full triple lock. That means you effectively miss out on the extra amount others get. In other words, same pension age, same entitlement, but the rise in your income is smaller. The difference might amount to several £100s a year, enough to matter when you're budgeting. 4. Why this matters and why the government tolerates it. From the government's perspective, freezing or limiting parts of older pensions helps manage long-term costs. The triple lock is designed to protect pensioners broadly, but older legacy schemes have structural differences. Some commentators argue the system isn't fair to those older pensioners. For pensioners, a difference of a few £100 might be the difference between skipping a treat or cutting back on essentials. If you were expecting £575 more next year and you end up with only £350 more, that's a surprise you should avoid. 5. What you can do now. If you're in or approaching retirement, here are some proactive steps. Check your pension forecast from gov.uk. Make sure you know which scheme you're in, how many national insurance qualifying years you have, and what your projected pension is. If you're under the old scheme and expect the full increase, don't count on it blindly. Instead, budget as though you may get less and identify areas where you might make up the difference: extra savings, part-time work, reduced outgoings. Look at your wider retirement income. Do you have workplace pensions, private pensions, savings? The state pension, even with a boost, rarely covers everything. If you're able, check if any years of NI contributions are missing. If you're short of the qualifying years for the full pension, consider whether voluntary contributions make sense. Keep an eye on news and official announcements, because the final figure for the increase depends on macro data, inflation, earnings, and the government's budget decisions. Finally, if you're helping someone else, parents, grandparents, make sure they're aware of this two legacy pension schemes, and cut-off issues can confuse many. 6. Separating fact from myth. Let's clear up a few common misconceptions. Everyone gets the same increase. No. As we've seen, for those on older pension schemes, some parts of their pension may not rise at the full triple lock rate. If I'm already retired, this doesn't affect me. If you're receiving pension now, you still need to check which scheme you're in and how your income will rise. The government will cut my pension increase at the last minute. While policy can change, the mechanism is established and widely expected to deliver the rise. But yes, the final percentage depends on variable data. I'll just get a big lump sum to make up the difference. No, this is about the annual increase in your pension income, not a one-off payment. 7. Scenario illustrations. Here are two example scenarios to bring it home. Scenario A. Jane, born in 1955, qualifies under the new state pension scheme. She's set to receive around £230, 25p weekly in 2025/26. With an anticipated 4.8% increase, her weekly pension will climb to about £241, 30p, an extra roughly £11 a week, or about £575 a year. Scenario B. George, born in 1948 on the old basic pension scheme. He already receives, say, £170 a week under the old rules. He will get an increase in April 2026, but because his pension includes parts that only rise with inflation, his annual uplift might be £350, £400 rather than £575. He'll miss out on that top slice. That gap could mean fewer outings, tighter budget, or skipping a holiday. 8. What's the bigger picture? This isn't just about 1 year's increase. It signals two wider trends. The cost of pensions and aging society. The government must balance protecting retirees' income with the long-term sustainability of pension spending. Legacy UVZs. New schemes, older pensioners, may find they are on less generous terms because pension policy has evolved. That means maintaining awareness is key. Budgeting in retirement, with inflation, energy costs, and health costs rising, even a seemingly good increase needs to be weighed against wider pressures. The boost helps, but may not feel as large as expected. 9. Final takeaway. If you're already receiving or about to receive your state pension, this coming increase is very welcome, but don't assume it will hit the full £575 more mark unless you've checked your scheme. If you find yourself under the older pension system, you may face a shortfall compared to what new scheme pensioners receive. The difference matters. The best defense is information. Know your date of birth, know your scheme, check your forecast, and plan accordingly. Thanks for watching UK Insight Now. Don't forget to like, subscribe, and share with other seniors who need this info. See you in the next video. Stay well, stay informed.